Good afternoon, everyone. So welcome to this webinar on the reporting requirements for IHI private members and contributing partners who are bringing IKOP and or financial contribution in IHI grants. So this webinar will be presented by myself. I'm Gail Lankmans, Financial Officer at IHI, and also by my colleague Calliope Cristoforidi, who is a Scientific Officer. And before we start, I'd like to inform you that we are recording this presentation. There will be some time at the end of the presentation to answer all the questions, and that Q&A session will not be recorded. So in case you have any question, feel free to insert your questions in the chat function. And so, as I said, we will try to address all of them at the end of the presentation during the Q&A session. And also all the slides will be shared with the participants after this webinar. So today we will try to cover all the different aspects for the reporting requirements, meaning when is it due, what does it consist of exactly, and how do you need to proceed in the tool to submit your reporting. And we'll give you also some concrete examples of reporting for entities who are contributing IKOP and or financial contribution in IHI grants only, or also for entities who are requesting EU funding. We call them the hybrid participants, and also for entities who are participating as affiliated entities or as associated partners. And then, as I said, at the end of this presentation, we still have some time to answer your questions that you have been written in the chat. So let's start, first of all, with the IKOP definition. So IKOP means in-kind contribution to operational activities. And so it consists of eligible costs that are incurred by private members and by contributing partners in implementing the action, less the EU contribution to reimburse those costs. So there are two important elements in this definition. The first one is that IKOP are eligible costs, and therefore they must fulfill the eligibility conditions. For instance, they must be actually incurred, recorded in the accounts of the entity. They must be necessary for the action. They must be foreseen in the estimated budget, verifiable as well, since they may be audited at some point. And you can see the list of all those eligibility conditions in the Article 6 of the Model Grant Agreement. You have the link here on this slide, so I invite you to click on the link and to have a look at the different eligibility conditions. It gives also some examples of what is not eligible and what can be eligible. And then the second element that is important in this definition is the fact that IKOP is equal to the eligible cost minus the EU requested contribution, if any, meaning that there is a calculation to be done. And so this EU contribution is either positive in case the participant is a hybrid participant, or zero for the others. So now let's start with the general reporting requirements. What is necessary to report, basically? It's mentioned in the Article 21 of the Model Grant Agreement, the different reporting obligations. But here you have a summary. So at the end of each project period, there is a project reporting to be done, which includes a technical part with a part A and a part B, and also a financial part. And there is also a continuous reporting that needs to be done, which will actually feed the part A of the technical part of the periodic reporting. So the part A will be automatically generated based on what you have encoded in the continuous reporting, and the part B is more a narrative section that you need to provide. But we'll explain this in detail during this webinar. And also at the end of the project, there is also an audit certificate to be provided, if applicable, so only if the threshold for that certificate is reached. And so those audit certificates, we call them CFS or CCS, but as I said, we will get back to this later on as well. So when is this periodic reporting needed? So it must be submitted within 60 days after the end of each period of the concerned project. Actually, each project is divided in several periods, as you know, depending on the total duration of the project. The first period is always 12 months from the start of the project, and then the subsequent periods, it's either 12 or 18 months. So if we take, for instance, the example of prominent projects, it's a project with 5 periods, and it starts the 1st of May 2023. So the first period of 12 months will last until the 30th of April 2024. Which means that the periodic report for the period 1 will be due 60 days after that, meaning by the 30th of June 2024. And the same logic is to be applied for the subsequent periods. Here you have a project reporting timeline. So if you have a project that has 4 periods, for instance, you will have then 4 periodic reporting needed. And as you can see on this graph, the periodic reporting module opens up at the end of each project period, while the continuous reporting is actually open from the start of the project and remains open until the end. So it can be updated anytime, this continuous reporting, but it's important to update it every time there is a periodic reporting ongoing, because as I said, the information encoded in the continuous reporting will actually feed the periodic reporting when you submit it to IHI. So how to prepare this reporting? Basically, it needs to be prepared by all beneficiaries and through the EU funding and tenders portal in 2 different modules accessible via the portal. So there is the continuous reporting module and the periodic reporting module. And each beneficiary will actually receive a notification at the end of each project period to contribute to the technical part B of the periodic report, to also ensure that the continuous reporting is up to date, and also to complete the financial part. Then that financial part will need to be e-signed and then submitted to the coordinator, who will then submit to IHI. So as I said, each beneficiary receives a notification from the portal and is invited to contribute to that reporting. And then the coordinator will review all the elements that have been submitted by the different beneficiaries in the portal, will approve those elements, and then submit the periodic report to IHI within the set deadline, which is, as I said, 60 days from the end of each project period. And the last bullet here on this slide are some useful links for you to have a step-by-step explanations on how to complete the periodic reporting module and how to complete the continuous reporting module. Here it's a slide just for FPR members, actually, because it's a comparison between the IHI IKOP reporting with the IMI2 in-kind reporting. Since we only had FPR members involved in our IMI2 projects, it's in the interest only of those members, but I think it's quite important because there are many, well, quite significant changes from the IMI2 in-kind reporting to now the IKOP reporting on the IHI. So the main, the first difference, is that the IMI2 in-kind reporting is annual, and it's due by the 30th of April each year for the costs that were incurred the year before, while for the IKOP, it's a fixed deadline, which is linked to the project periods. So it's every time 60 days after each project period. And the tool is also different. So it's the funding and tender portal for IHI, for IKOP and the IHI, while it is the SOFIA tool for the in-kind and the IMI2 project. For IMI2 in-kind reporting, the company directly reports to IHI, so it's not a reporting that goes through the coordinator, while for IKOP and the IHI grants, the reporting is done via the coordinator, since it's a coordinator who approves all the elements and then submits to IHI. Regarding the certification, there are also differences. So for IKOP, it's only at the end of the project and only if the threshold is reached. The threshold is of 430K. And while for IMI2 in kind, The certification is annual and there is no minimum threshold. So all in-kind should be certified to be accepted by IHI. And then one last difference. So for IMI2 in-kind reporting, there is one report per year and per company, while for IHI IKOP reporting, there is one report per period per project. So those are the main differences in the interest of FPR members. So now I will start explaining the financial part of that periodic reporting, and then my colleague Calliope will go through the technical part and the continuous reporting. So for the financial part, at the end of each project period, the beneficiaries, they will receive, as I said, this notification from the portal, and they will be requested to complete their own financial statement for the concerned period. And also any adjustments if necessary. Of course, for the first period, there are no adjustments, so it's only relevant from period 2 on. And also in final period, the beneficiary, they will have to upload a certificate provided by a qualified external auditor, if it is applicable, because as I said, there is a specific threshold for each of those certificates. So there are two types of certificates. There is the CFS, which means certificate on the financial statements, and the CCS, which means certificate on the statements of contributions. So the CFS is necessary in case the requested EU contribution exceeds 430K. So that's for the hybrid participants. While the CCS is necessary if the requested EU contribution is 0, but the sum of the reported IKOP plus financial contribution paid is equal or higher than 430K. Apologize. I will get back to this certification aspects later on as well. So now regarding the financial statement, it's actually the same model for all beneficiaries and affiliated entities. So also for private members and contributing partners. And you can find that model in the model grant agreement. It is the Annex 4. So in this financial statement, you need to declare all eligible costs that have been incurred during the period. So even if it exceeds the estimated budget. And it's also necessary to specify the requested EU contribution, if any. So it will be positive for the hybrid participants, and it will be equal to 0 for the others. And here it is how it looks like, this financial statement. So you can see that some costs have an editable field, some others have a link that you need to click, and some others have also a little icon on the right with the R, which is when the use of resource needs to be completed. And you have here on this slide the link on how to complete your financial statement and the use of resource specifically. So you click on this, and again, you have like the step-by-step provided by the Commission on the Funding and Tenders portal. So for you to follow the explanations step by step. You can see in this on this page, on this slide, that the indirect cost is calculated automatically and for all participants as 25% of the direct cost. So it's since it's automatically calculated, you also need to actually ensure that there are no indirect costs included in the other cost categories to make sure there are no double counting. Regarding the personnel costs, so you can declare either actual or unit costs. And when you click on the little icon for the use of a source, you are requested to fill in the number of person months per work package. And you can also declare cost for the use of in-kind contribution from a third party. So in case you have seconded personnel, for instance. So as I said, there are two options. Either you can declare your personnel cost as actual cost or as unit cost. In case you declare your personnel cost as actual cost, you must use the formula from the Horizon Europe Model Grant Agreement. And you have actually quite a lot of concrete examples in the annotated Model Grant Agreement. So in case you have a person working full-time or part-time, in case you have parental leave, how to deal with this. There are many explanations on basically how to calculate this correctly. But the standard formula is that, so for personal cost for one person, you need to multiply the daily rate for that person with the amount of days that have been worked on the action, with a maximum of 215 days per year for a person working full-time. So that's the standard formula that needs to be used for actual costs. And so for, in case you want to declare unit costs, you need to make sure that the average personal cost is in line with your usual cost accounting practices. And you also need to make sure that in the FTE rate, you do not have any indirect costs. Again, for the same reason as I explained before, since the indirect costs are calculated automatically, you need to make sure that in the other cost categories, there are no indirect costs included. And so in case the entity usually calculates fully loaded FTE rates, so including indirect cost, it will be important to recalculate that rate to make sure that the indirect costs are excluded. And another important element regarding the personal costs, it's the fact that the time worked on the project must be documented. So either you can sign a monthly declaration, and you have the template here. Apologize. Or you use another reliable time recording system if you have one. So either on paper or computer based. But it's important for audit purposes. Regarding the subcontracting costs, so you can click on the icon arrow for the use of resources. And so you will be requested to insert the actual cost paid to the subcontractor, to provide a short description of the subcontracting, and to mention whether the subcontracting is foreseen in the Annex 1 of the grant agreement or not. And in case it is not, you need to provide a brief explanation on this. And also, in case it's not foreseen, there is also a section called unforeseen subcontracting in the periodic report part B, but Calliope will talk about this later on. Regarding the purchase costs, just a small reminder before I start, it's really important that the cost charged to the project and declared as IKOP are always eligible costs actually incurred. So, for instance, there cannot be a commercial price of self-produced consumables declared there, because it's not a cost, basically. So just a little parenthesis on this. But so in the financial statement, in the tool, you can insert 3 types of purchase costs, either travel and subsistence, or equipment, or other goods, works, and services. So whenever you insert those values, the tool will actually calculate automatically what is the amount of purchase cost that needs to be explained, because it's only the amount that exceeds 15% of the personal costs that needs to be explained. And as I said, it's calculated automatically by the tool. So the tool will tell you, okay, you need to explain that amount of purchase cost, and you need to start with the main, the major cost items. So to give you an example, if you have declared 120K personal costs, and you have declared 25K purchase costs, the tool will calculate 15% of the personal cost, will give you 18K, and which means that the cost to be explained as purchase costs will be 7K, because it's 25 minus 18. And so once you need to provide an explanation, what do you need to provide in the tool? Basically, the costs, obviously, but also you need to insert an item name, or a very short description of the item, the related work package, and you need to mention also if it is foreseen in the Annex 1 of the grant agreement or not, and And again, same logic as for the subcontracting. In case it is not foreseen, you need to provide a short explanation in the tool. And then in the financial statement, you also need to insert the requested EU contribution. So it will be in most of the cases, it will be 0, but it may be also positive for in the case of the hybrid participants. And then you need to validate, save, validate, and then electronically sign. So the beneficiary will need to sign electronically the financial part and then submit it to the coordinator, so that the coordinator will then include it in the periodic report before submitting to IHI. And by signing the financial part, the beneficiaries actually confirm that the information provided is complete, reliable, and true, that the costs declared are eligible. So again, I invite you to have a look at Article 6 of the model grant agreement to make sure the costs you declare are eligible. And the beneficiary also confirmed that the costs and the contribution can be substantiated by adequate records and supporting documents. So that's Article 20 of the grant agreement. It relates to record keeping for audit purposes, basically. So in case of affiliated entities and associated partners, how does it work? So the affiliated entities have actually no access to the reporting module. So they have to prepare their own financial statement separately outside of the tool, but they can get it from the grant agreement. It's Annex 4 of the grant agreement. And then they need to blue ink sign that on paper and supplies it to the main beneficiary to which they are affiliated. And then it will be the main beneficiary who will need to fill in the financial statement of the affiliated entity in the system, and then electronically signs it and submit it to the coordinator. For the associated partner, they also have no access to the reporting module. The costs, they need to be included in the financial statement of the designated beneficiary. And there will be no individual financial statement in the system, because the cost will be included in the financial statement of the designated beneficiary. So that's a difference for the affiliated entity. And for audit purposes, the designated beneficiary needs to be able to demonstrate the split of the reported cost per entity and per period. So you will have noticed that there is actually no specific field in the financial statement for IKOP, non-EU IKOP, and FC paid. Indeed. So that's why those information, those values, they must be specified in the continuous reporting. There is a specific tab called GU contribution. And so in that GU contribution tab in the continuous reporting, you need to specify for each private member and each contributing partner the amount of IKOP, of non-EU IKOP and FC paid. IK is not included here because it's separate. It's reported in a separate tool. So it's very important here that you pay attention. So all private members and contributing partners, they need to encode the total contribution since the beginning of the project. In terms of IKOP, non-EU IKOP, and FC paid, it's 1 row per entity. So also for the associated partners, for instance, the value to be encoded needs to be cumulative. So it's not per project period, meaning that when you are in period 2, at the end of period 2, you will need to insert one figure for actually the total of period 1 and period 2. And in period 3, it will be the cumulative amount since the start of the project, of the total for period 1, 2, and 3, basically. So, and since it's in the continuous reporting, it needs to be updated every time there is a new periodic report with the new amount, the cumulative one. It's really important that you ensure that the values are consistent between what you insert in the continuous reporting, what you insert in the financial statement, and what you insert in the part B of the technical part of the periodic report. Make sure all those that the figures match and values are consistent with each other. And another important element here is that the continuous reporting needs to be completed before the periodic report is actually locked for review by the coordinator, because the locked for review thing will freeze the data, and then it will not be possible to insert to modify the figures anymore, unless it is reopened. So now regarding the certification, which is due only in final period and also only if the threshold is reached, you have here a table that summarizes a bit the different conditions, threshold conditions. So as you can see, the CCS needs to be provided if there are 0 requested funding, but that when the total of IKOP and FC paid is higher or equal than 430K. And there is a CFS that is needed whenever the requested EU funding is equal or higher than 430K. So the threshold calculation is individual. It's calculated at the level of each entity and per project. And if the threshold is reached, there is just one single certification to be provided and to cover all the costs and contributions. So in case of a hybrid participant, for instance, you don't need to provide one CFS and one CCS. It's only one CFS if the threshold of 430K has been reached, and that's it. Currently, there is a CFS template that is available, but there is still no CCS template that is available. The Commission is still working on this, but we don't have it yet, unfortunately. And then I have also some most common errors that are detected in audits, but it's based more on the experience in IMI 2 projects, obviously, since we haven't had any reporting on the IHI project. But just to warn you or to give you an idea of the kind of mistakes that could be made. So for instance, an error could be that an entity declares costs that have actually been incurred by another entity that has not been identified in the grant. So it's quite important here to make sure that all involved entities are identified in the grant, whether they're like third parties or affiliated entities or whatever. They need to be identified in the grant before costs are reported. Another type of error is when the costs are not recorded in the accounts of the beneficiary. Then the auditor cannot reconcile the amounts, and it's also an issue. Or for instance, if the calculation of days that have been worked on the action is wrong, or when some estimated costs have been reported instead of actual costs, or when there is no timesheet, no supporting documents to prove the amount of days that have been worked on the project, when there are inconsistencies with the HR records, and so on and so on. Regarding the subcontracting costs, an error that happens sometimes is that there is no valid supporting document or no proof of that value for money or lowest price if it's appropriate. Regarding the equipment, an error that is seen sometimes is that the full price is charged instead of the depreciation cost. So normally for the equipment, it's only the depreciation that should be declared, and only for the part that has been used for the project. And it's also important that the depreciation calculation is the one that is usually used by the entity. So it should be in line with the normal practice of the entity. Regarding travel costs, sometimes there are no valid supporting documents, or the costs are not related to the action. So as a best practice, make sure You keep supporting documents of your of the events, of the travel costs, the agenda of the meeting, and so on, to make sure you have some valid supporting documents. Yeah, and I can only but remind you again to have a look at articles 6, 6.1, 6.2, and 20 of the annotated model grant agreement. Those are not too long, really, and they are key. So if there are only one or two things to read, I would say this is really what should be read. And then Calliope now will present you the technical report of the periodic report, so the part B.
Thank you, Gail. You can push this a bit. Perfect. So, as mentioned, at the end of every period, the consortium is asked to also prepare and submit the technical report, or what we call Part B. So Part B is a narrative description of the work and has the format of a document. This exercise is usually coordinated either by the project coordinator or a designated project manager in the project who collects all the input, but it is expected that all beneficiaries contribute to Part B. So once Part B is finalized, the coordinator uploads it as a PDF document as part of the whole periodic report submission. A template for Part B is available in the link put in the slide, but also on the IHI website. And please make sure to use this template and not the general Horizon Europe one, as it has been tailored to IHI specific needs. Next slide, please. So the main aspects of the report that are of most relevance to you and where your contributions will be very important are listed here. We will go through some of these points to give more details. And what we expect, of course, is continued consistency between the financial part and the technical part. As you can see, several of these elements were already explained earlier by Gael and are also captured elsewhere in the reporting. So please remember this consistency. Next slide, please. So in terms of the explanation of the work carried out and progress per work package, in this section, we want to understand the progress focusing on key activities and results. Can you still, yeah.
You're not muted, huh? I'm sorry.
Oh, can you hear me? Yeah, I think yes.
Okay.
So yeah, we briefly explain the main work focusing on key activities and results, referring when relevant to milestones, deliverables, and publications. And importantly, if you can press one more time, Gail. We want you to briefly describe the activities by each participant. What does it mean is that as a beneficiary participating, you are asked to fill in this section with your activities performed in the work package. This is important to us to be able to validate the personnel cost and effort of each beneficiary. If, for example, as a participant, you report personnel cost and effort under work package 1, we expect to see a description of your activities under this section of the report aligned with the reported costs. Next slide, please. So, Gail, this is back for you.
Yeah. Yeah, so the financial contribution paid, as I mentioned earlier, there needs to be, there is a section specifically in the Part B of the technical report for that. And so the three first columns, they need to be filled in by the entities that are paying the financial contribution, while the three last ones needs to be filled in by the entity who is actually receiving the financial contribution. And so as an entity paying a financial contribution, you need to specify what is the entity paying it. So it needs to be obviously a private member or contributing partner. And you need to specify the entity that is receiving that financial contribution, which must be actually an entity eligible for receiving funding. So for instance, it cannot be a Swiss company or a US company if they have been deemed, if they have not been deemed essential for carrying out the activity. Then you also need to report how much you have paid. So what was the financial contribution leaving your account in the first column, while the entity receiving that financial contribution will also need to specify how much of that financial contribution has been used during the current period and during the past period, and what is still left to be consumed basically for the future periods. So we make this distinction because it's not always it's not because a financial contribution is paid that it's automatically directly used in the same period. So you need to make sure that the total of those columns are correct, and that the big A, as you can see on the screen, equals actually the small a, b, and c. So that's just for you to make sure that whenever you fill in this table, you make sure it is correct. So also the information inserted in this table should be, of course, consistent with what you have entered in the GU contribution tab in the continuous reporting. You also need to have a separate row for the affiliated entity and the associated partner. So it's not only for the beneficiaries. And in case you need to report a financial contribution that was initially not foreseen in the DOA, well, there are two approaches. If the financial contribution is actually to cover costs of activities that are totally new, so not already planned in the DOA, it would require an amendment, and therefore it should not be reported here. While if the financial contribution is to cover cost of activities that are already foreseen in the DOA, then it can be reported, and then you will be requested to provide a justification in the deviation part, which will be explained by Calliope in a minute. And then there is also a table on non-EU IKOP in the part B of the technical report. So just a small reminder, what is non-EU IKOP? So it consists of the eligible costs incurred by private members and contributing partners for activities that are carried out outside the EU and outside the associated countries to others in Europe. And so what is expected in this table is to insert the non-EU IKOP for the current period, and again to ensure that values are consistent with what has been included in the GU contribution tab. And the same principle needs to apply as for the financial contribution. So in case you need to you need to declare some non-EU IKOP that was not foreseen, but it is linked to an activity that is totally new, then it would normally require an amendment, and then it should not be reported in this periodic report. While it can be reported if it's linked to an activity that was already foreseen in the DOA, but for instance was expected to be EU IKOP and not non-EU IKOP. But in that case, the activity as such is foreseen, and therefore it can be reported, and you just need to provide a small justification in the deviation part, which will be explained, I think now, yes, by Calliope.
Yes, so another section of the part B is the explanation on deviations in use of resources. So by beneficiary, you're expected to provide explanations on deviations regarding the budget use and the effort in the period. So we ask you to explain any significant deviations compared to the initial work plan, both in terms of budget and effort. And let me give you an example. it is year one of the project, but it's clear from the description of action that your main work will be in year 5. You do not need to justify the low resources used in year 1. This is not considered as such a deviation. Whereas if it's year 1 of the project and you required a lot more effort into the preparatory work than anticipated, then this can be considered a deviation, as it will affect your overall contribution. So this should be explained. Please remember what Gael said previously about deviations related to financial contributions and non-EU IKOP, as some cases, as she highlighted, require an amendment and should not be reported here. All other deviations significant should indeed be captured under this section. Next slide, please. So there is a section in the report where you can include unforeseen subcontracting that occurred in the period. So IHI may exceptionally approve costs related to subcontracts not included in the DOA without formally amending the grant agreement, if only the circumstances are explained and justified. We've put here what is expected in this section should there be unforeseen subcontracting, but this should not be common practice, and an amendment should be prioritized if unforeseen subcontracting occurs. Next slide, please. So we're moving now into the continuous reporting, which is as well with the rest part of the reporting obligations. So it is done in the Sigma tool, and it opens at project start date, and all beneficiaries have access to it. It has to be updated by the consortium before each periodic report is logged for review by the coordinator. And at a periodic report submission, the tool will freeze the data and it will automatically feed what we call part A of the periodic report. So at the periodic report submission, we expect that the information provided in the continuous reporting is consistent with the information of part B. There are several tabs to be filled in. Yeah, thank you. More than those included here, but these are some examples. If we move to the next slide. So this tab is the project summary tab. The text included in this section should cover the context and overall objectives and the work performed and main achievements by the end of each period. So it's important to update it with the latest available information, and the text available here will become public and should therefore not contain confidential information. It should be written in such a way that is understood by lay audiences, and the focus should be on results. Links to publications and so on are encouraged to support the results. Of course, it is done in a coordinated way with the whole consortium, but your contributions to each of these sections are very important. Next slide, please. Moving to the deliverables tab. So it is important that you are aware which deliverables you are responsible for or which deliverables you are expected to contribute to, as indicated in the description of action. Next, if you press again, Gail. Again, yes. Please remember that all deliverables flagged with a dissemination level public will be published in a repository. So the content should be as such for a public deliverable. If for any reason a deliverable is delayed, a comment should be included in the comment box as indicated in the slide that includes a justification and a new delivery date. Next slide, please. Similarly for milestones, when a milestone is reached, you have to tick it as achieved together with a delivery date, and if delayed, please include a comment. Next slide, please. Critical risks were already defined in the DOA and are simply included here. And at the end of each period, beneficiaries should give the state of play of every risk identified in the DOA, and if necessary, provide new mitigation measures. We can also include unforeseen risks. Yeah, thank you. Next slide. So there is a tab as well to include all project-related publications. Some important aspect to consider when it comes to publications as part of your obligations from the grant agreement. So peer-reviewed project publications, they must be open access and available in a repository together with a link to the repository. They must appropriately acknowledge IHI funding, including the founding members, and they must include a disclaimer. Please keep this in mind. We have some experience that this has not always been consistent, so it's very important to remember it from the start. So there are more tabs to be filled in, including results, as indicated here, and then also tabs related to impact, data sets, dissemination, and communication activities. Next slide. As Gael mentioned earlier, there is also this JU contributions tab to be filled in, but instructions have been already provided, so I will not be repeating it. Next slide. So to summarize the periodic reporting steps, of course, you will receive a notification in due time, and all beneficiaries within the 60-day window should contribute to the technical part of the periodic report, ensure that the continuous reporting is up to date, complete their financial statements, and e-sign and submit their financial part to the coordinator. The coordinator then will approve and submit all the elements of the periodic report. IHI will then review the submitted report and either accept or reject it. Upon rejection, the consortium will be asked to address comments raised by IHI and then resubmit. And once the periodic report is considered appropriate and all issues have been addressed, IHI will initiate payment to the coordinator for the period. And now Gail will provide some concrete examples.
Yeah. So one example, in case we have a private member or contributing partner who is contributing IKOP and financial contribution only, so not requesting any EU contribution. So in period 1, imagine the IKOP is 200K and there are 50K of financial contribution paid. In the financial statement of the beneficiary or the affiliated entity, the entity will need to declare all the eligible costs, which is in this case 200K. The requested EU contribution is equal to 0, since it's not a hybrid participant. In the continuous reporting GU contribution tab, the entity will need to insert 200K in the column IKOP and 50K in the column financial contribution paid. And in the technical report part B, the entity will need to complete the table on the financial contributions. In case of hybrid participants, for period 1, in case the hybrid participant has incurred 200K eligible costs, is requesting 50K as a requested EU contribution. What does it give? So in the financial statement, again, it's an example for beneficiaries and affiliated entity. So in the financial statement of that entity, it will be necessary to declare, again, all the eligible costs, which will be 200K, but it will be also necessary to specify that 50K are requested EU contribution. And so this means that IKOP is actually equal to 150K. So this amount of IKOP needs to be specified in the continuous reporting in the GEO contribution tab. And in case of an associated partner, if that associated partner has incurred 200K of IKOP and 50K of financial contribution paid, remember, the associated partner has no access to the reporting module and has also no financial statement in the system, but it is the designated beneficiary who is in charge of the reporting for the associated partner and who is in charge of inserting the cost of the associated partner in its own financial statement. So in the financial statement of the designated beneficiary, it will be necessary to declare the eligible costs, not only of the designated beneficiary, but also the cost of the associated partner. And so for the cost of the associated partner, in this case, it will be 200K eligible costs. Requested EU funding 0. And in the technical report part B, the designated beneficiary will also need to complete the table on the financial contribution for the associated partner. So adding one specific row for the associated partner to specify the 50K financial contribution paid. And in the continuous reporting in the GEO contribution tab, the designated beneficiary will also need to insert a row for the associated partner, mentioning 200K as IKOP and 50K as financial contribution paid for the associated partner. Just to finish, one word on IKA reporting, because we haven't addressed this point yet, because it's actually not included in the periodic reporting. It's really a separate, it's a separate tool, a separate deadline. It's also reported directly to IHI, so it's not going through the project coordinator. There is no minimum threshold for the IK certification. I invite you to have a look at the link on this page, how to report IKA, and there is also the IK guidelines that are available on our website, and they will be revised. And I mean, they have been revised, and the new version will be available in the coming days. But so just for you to know that basically IKA is not included in the periodic reporting and in none of the elements that we have been addressing today. And here it is a comparison table between IKOP reporting and IK reporting. Again, repeating a bit the different elements that you already know by now. For your information, maybe just as a reading material for when you receive the slides. And yeah, this last slide is to provide you some useful links. So as I said, the model grant agreement and the annotated model grant agreement are really like the two key documents that you need to read to be aware of the different obligations and your different rights. The part B template is also the one that is important because it is tailored to IHI. And so you have the link here, but it's also available on IHI website. And the CFS template, we will provide you also the link to the CCS template as soon as it is available. And then here are some useful links as well to for you to follow the step-by-steps to complete the different reporting financial statement and different modules. Now, I think we can stop the recording and start addressing the different questions that have been inserted in the chat.